Good evening. This is Doc Severson for the Theo Night Report for Tuesday, May 8th. I'm going to start out tonight's report, and we have about 8 minutes left to go before the closing bell, and it looks like it's not moving all that much. So we'll zoom in here on the S&P 500 ETF or the spider, because I've got the expected move lines drawn in for not only this week or this Friday, above and below, but we also have them drawn in for the back week. And lately, the pattern has been is that we're extending the move beyond the expected move or the one standard deviation move for the front week, and we're actually impinging upon the back week. That certainly was the case last week. So this is one of these markets right now that nobody's really happy with. If you're a swing trader, none of the swings are extending. So it's really tough to get any kind of profits unless you're catching the absolute bottom or the absolute top on your swing. And for those of you that are selling premium around the range, congratulations, but I got bad news for you. You're about to get run over. In today's market, we're in this condition where the implied or forward-looking volatility, the forward move that's priced into the option chain, has been regularly underestimating the actual realized forward movement. So I know that we've been saying this quite a bit lately, but this is something that we have to keep reminding you guys over and over and over again, because this is what's happening right now. So the edge is really not with the option seller, even though it seems like it. It seems like the edge would be with the option seller because the price is just stuck in this very, very small range. And this is what I run into with iron condor traders when they say, hey, the price is not going anywhere. I'm going to sell premium around this. That's terrific, but range contraction like this runs into range expansion, and this is a high probability to see a big breakout or breakdown from this area as the price continues to kind of wedge into this symmetrical triangle. You can see this, that each of these swings is getting smaller and smaller and smaller as we get closer and closer to the apex of this triangle. It's just wedging itself into an impossible place, and it's going to move here very, very soon. So how we've been trading this right now is to kind of flip the iron condor upside down. We've been placing long iron condors. So we want the price to go outside the one standard deviation range. And it's been doing that with regularity lately. So that's the S&P. Now what I also want to take a look at here is the Russell. The Russell is actually by far the strongest of the major indices that we follow. This is really almost getting to the point of printing an ascending triangle. Now, an ascending triangle would be a pattern where we have essentially the same highs and we have a series of higher lows along the way. Well, we have a small amount of lower high to this pattern as well, but clearly we have a strong series of higher lows for this pattern. And as the price approaches 1600, what we're also seeing is that there's a tremendous amount of potential energy for this chart to trend. So we may look at instituting more of these long iron condors on the Russell, probably through the IWM as well as the spiders. Now, the most profitable trade is if you're going to just do a single-ended spread trade, a directional swing trade in one direction. And if it works out great, that's going to be the most profitable trade that you can possibly do at the most efficiency. However, if you're not really sure, or if you don't presume to know which way that this is going to break out, and I don't presume to know which way this is going to break out. It could break out, it could break down, because we're not in a quiet and trending condition right now. We are in sideways and volatile across the board. So really this could go either way, and this is what's been happening. It's been going either way, and no swing has been extending. So right now the most appropriate trade is just to take direction out of it and play this as a long gamma, long iron condor. Just a quick look around the S&P 500 sector ETFs. These are the builders, and the builders right now are in a kind of a weekly flag pattern. So watch for this descending trend line to get broken to the upside. Right now this one looks like it's in a consolidation and is in a standard bullish flag pattern. That's the XLB. The next one here is the XLE, which has made a great comeback lately. So flagpole has led into a flag pattern, building up a tremendous amount of energy again. This one's ready to go. Watch for this to break this box here. So we can just simply place a box around this price level, this consolidation, And if it's meant to break higher, we'll certainly see it penetrate the top of the box and continue to trade higher. Geopolitical events overseas are certainly driving energy these days. Now we get to the financials. Financials have been a lot of talk lately because of potential rising rates. And we've seen the financials go from being just completely parabolic into a fairly decent consolidation pattern. So this has been following pretty much along with the S&Ps. But notice how we have an equal low down here. So we've stopped kind of the pattern of lower lows. We have an equal low and we have a descending trend line. If the price is able to break the descending trend line, then we have the next leg to the upside. Now, keep in mind, when I talk about the next leg to the upside, what we could see is a break up here, and this forms a lower high on a larger time frame. There is the closing bell. So what this would look like is something like this. We'd see a break up, and this is going to form a lower high on a larger time frame, could even be on the monthly chart, and that's going to be a very dangerous signal. We haven't seen that lower high combination really since 2008, and it doesn't show well on the financials, but on just about every other chart we have a significant lower high. That is the financials. I'm going to skip the industrials, technology, and go straight to consumer staples. So XLP staples is not doing well. It's down about 17% right now. Not into bear market territory, but certainly the weakest by far of the S&P sectors. So this one has kind of been selling off as energy has been rising and has sort of balanced out the two. But right now, consumer staples is very weak. I want to jump right to consumer discretionary. Oddly, this one is still very strong. This is showing more of a bullish flag than anything else. Watch the upper trend line to be penetrated for a break of that flag as we start to see a lot of energy come into this one. So this one has the potential to run quite a bit. And then finally, we'll finish up with XLU for the utilities. And this one's been in trouble for quite some time. And right now what I'm seeing is more of a bearish flag on the weekly pattern. Bearish flag on the weekly pattern. This has built up a tremendous amount of energy. Watch for that lower trend line to be broken. Flag patterns typically set up as a halfway house in the middle of a larger secular trend. So initial swing down, flagpole, flag sets up, breaks the trend line, and then it's about another equidistant move to the downside. That would certainly put it somewhere down in the 45 to 44 area on the XLU. Most of the big earnings are out. Certainly we've gotten Apple out of the way and Google and Facebook and Amazon. So all the big names are out, but one that's starting to get increasingly more attention has been Nvidia for good reason. Look at this chart going straight up from about 20 up to 250 now. Just a meteoric rise that we've had in Nvidia, and for good reason, because of their product set, and it's no small part due to all the miners trying to get graphics cards and just everything else that they're doing. They've got kind of the Midas touch behind everything. So watch out for earnings, which are coming up, I believe, on Thursday. So even though this does say, yep, it's 5:10. So on Thursday after market, we should be seeing Nvidia report. And it could be interesting to see. There's a lot of energy at larger time frames here for Nvidia to make a big move, either to the upside or to the downside. Certainly good earnings are already being priced in as we have the daily chart down at exhaustion now. So, but regardless of what any chart indicator says, we're going to have a relatively big move. As you've seen in the past from Nvidia, every one of these has generated a pretty decent move on its own, and it's getting bigger and bigger with each one. So that is the big event. The rest of the week is actually fairly catalyst free. So the market may have to figure out what to do on its own. There's not much Fed speak. There's not much in the way of really market moving earnings nor economic releases. So we're back to the S&P coiling in the apex of the triangle. Which way is it going to break? This is why we trade. Stay tuned. Thanks for listening, folks. We'll see you tomorrow.